We're gonna try to do this in one take. Let's do it live! Hey, do you guys like the lighting? I look good, don't I? Things have changed since the last video. Let's just say if you put $1 in Bitcoin, you'd have more than $1 right now. All right, so let's get down to it. When you think about Bitcoin, you might be thinking, why this rise, right? And is it sustainable? And what about the volatility that the skeptics keep talking about? Is that gonna last, right? Well, in this video, I'm gonna give you guys I'm gonna compress things down, and I'm gonna give you the analytical framework to answer these questions for yourself. My name is Marwan, and today Marwan wants to tell you about what's happening in blockchain technology. Before I start telling you the story, we have to set the time and place, right? Well, the place is planet Earth, and the time is 2021, where 30% of all the US dollars in circulation, approximately, have been created out of thin air, basically, in the past 12 months alone.
Simply flooded the system with money.
Yes, we did. That's another way to think about it.
Rescue package that dwarfs the entire national budget of the United States.
The kitchen sink, folks, including corporate bonds, munis, asset-backed commercial paper.
And there's no end to your ability to do that.
There is no end to our ability to do that.
Right, and we got a lot more, printing to come, be it, or just stimulus, period, fiscal or monetary. You might be thinking, why now, right? Why is buying Bitcoin now at its all-time high a wise choice, considering what happened in 2017, when everyone thought Bitcoin was a bubble? Well, there's plenty of reasons why, and I'm going to run you through each of them. First, there's access. Then there's institutional money. Then there's the decentralized financial infrastructure built on the blockchain, and then the tax incentives that make you keep the value locked there, right? So when we talk about access, what do we mean? We mean Bitcoin ETFs. The Grayscale Bitcoin Trust is a good example, right? I know Van Eck Vectors just applied for Bitcoin ETF.
Your space, you have filed for yet another Bitcoin ETF
as well, right? What does that mean? It means more people can buy Bitcoin, right? You can buy Bitcoin through your ISA if you're living in the UK, or you can buy it through your 401k, I believe, if you're a United States citizen. When we're talking about institutional investors, we're talking about Square.
Square Inc. has grown from a scrappy payment startup to a $26 billion fintech giant.
Square, SQ, the payment technology company that can turn any smartphone or tablet into a credit card reader.
Right, which is this big fintech company started by Jack Dorsey, founder of Twitter. They own about 4,000 Bitcoins. Right, and that's a bank. That's a proper financial institution / they do payment processing. They're a bank too. They own the Cash App. You have the insurance giant Mass Mutual that owns double what Square owns. They own about like 8,000 Bitcoins, I believe. But more importantly, there's MicroStrategy. MicroStrategy is another big one, right? Especially when you think about who Michael Saylor is. Michael Saylor's no ordinary cat. This guy graduated from MIT. He's a rocket scientist, and I think he also studied like the history of science, which is all about paradigm shifts. Michael got in early on the internet craze. I believe he made a lot of money buying and selling domain names, right? So think of domain names as like the land of the internet, so to speak. So this guy's got vision. All right, and but enough for me. I'll let you hear it from Michael himself.
Tesla, Apple, and Google all have the same problem. They're sitting on huge piles of cash, and they're dissipating shareholder wealth at a rate of 15 to 20% a year times that cash. They need to turn that from a liability into an asset, and the best way to do it is convert it into Bitcoin, because Bitcoin's going up more than 100% a year. Cash is debasing at 15% a year. Bitcoin's the world's first engineered safe haven asset, and it's running on the world's first digital monetary network. I mean, everybody in the world, every institutional investor is looking for a safe haven, and they're all losing faith in gold, and they're losing faith in sovereign debt as a safe haven. So Bitcoin is sitting at the right place at the right time. It's very appealing to anybody that wants to preserve shareholder wealth.
I mean, Michael even had conversations with Elon Musk on the Twitter sphere. That's a side note, nothing analyze too deeply, so to speak. But it's still very, very interesting. The guy's making some moves, you know. Secondly, there's the DeFi ecosystem. All right, stable coins, of course, are at the helm of this. And what are these stable coins, and what does their adoption mean for the blockchain ecosystem? Now, there are a lot of other things, you know, you can do on the blockchain. As you know, you can hold these other digital currencies. There's insurance on the blockchain now. There's margin trading. There's no lottery. There's no loss lotteries. You know how I think you pool your money together with a bunch of other users, and then you earn interest on this lump sum of money that all of you guys collected, and then one person makes all that interest, right? So the only thing you pay through these no loss lotteries is opportunity cost, not actual loss of tokens, so to speak. All right, so what are these tax incentives? What are these tax incentives that we're talking about? So if you think of a blockchain like Ethereum, for example, it allows you to de-risk in a major way within this ecosystem without creating a tax event because of stablecoins. The existence of stablecoins on the Ethereum blockchain allows someone that owns Ether, for example, like an early investor, let's say, to hypothetically pull out some of his position in Ether and convert it to a stable coin, which is a digital currency that's supposed to reliably track the value of a fiat currency like the dollar or pound, for example. This, of course, can happen through a decentralized exchange, so you can make it happen through your wallet. If you access a decentralized financial app, right? If you access a dApp like Uniswap, for example, you could make that happen. But with interest rates as low as they are, the biggest game changer, the protein of all of this, so to speak, is the environment that rewards savers, right? Because you can earn interest on your stable coins. If you have cryptocurrency that runs on the Ethereum blockchain, there's a high probability that you can earn interest on this token through Compound.
With Compound, Maya can earn interest on her crypto assets by supplying them to the protocol. Other users can then borrow her crypto, and then they pay interest on the borrowed assets. All of the suppliers and borrowers who use Compound combine to form a series of blockchain-based interest rate markets. When Maya supplies an asset to Compound, it gets added to a global liquidity pool which other users can borrow from by providing collateral up front.
Basically allows people to save and earn interest or borrow and pay interest. And the thing that protects this whole ecosystem is over collateralization. This makes things much safer, right? So if I want to borrow DAI, okay, let's just say, for example, I was an early investor in Ether. Ether went up so high, and I don't feel like selling Ether, right? Because you know, if I have $1,000 worth of Ether and I sell it, I have 1,000 problems, right? Because I have to put this money somewhere else, right? So let's say I think Ether is going much higher and I want to take out a loan against my Ether. I could do this through Compound, right? And the way that works is if I want to borrow DAI, I stake my Ether. I have to, let's say, collateralize like 150%. You know, to make the math simple, let's say I supply a value of $100 of Ether, 100 value equivalent of Ether. I cannot borrow more than $66, right? I do that over time. I make sure my collateralization rate is not dropping below 150%, and I pay interest down the line. Someone else might deposit DAI and expect to be paid interest, and you can see how the math works just when I give you the opposite side of that coin. Now, knowing all of this, it's now easy to draw conclusions on how gaining interest from saving and paying interest through borrowing is possible on the Ethereum blockchain using a decentralized exchange accessed through your mobile app, just your phone, basically. Now, what are these stable coins, these digital currencies that track the value of fiat currencies, and they manage to earn you more interest than you could ever ask for at any major bank? You know, well, there are two kinds. There's the centralized stable coins. These are the ones that are minted. They're equal to the dollar, right? So if you give them I think Coinbase has ones, right? If you give them $1, they'll give you USDC, right? Which is this this digital US dollar, right? One USDC equals exactly $1 all the time, right? Some of them I believe is a little controversial.
Suggesting that this pseudo stable coin Tether is being created by fiat.
DAI, on the other hand, DAI, if you have if you're comfortable with derivatives, I can tell you a good way to look at DAI. It's basically you're holding dollars, right? Think of it as you're holding dollars, but you're selling puts on the digital currency that's behind this thing that tracks the dollar, right? And the way you can think about that is when someone wants to create DAI, right? The way DAI is created in a decentralized fashion is through over collateralization, right? So if you have again like $100 of ether,
let's say the over collateralization rate is at 150%. And if you deposit $100 worth of ether in DAI, you can only mint $66 DAI, right? $100 worth of ether, you can mint $66 worth of DAI.
Right? Now, considering all of this, there are things to look out for, right? There's still a lot of money to be made. There's still a lot of developments. There's still a lot of opportunities. This is a revolutionary space. I mean, in my opinion, anything that's happening on the streets now, like let's say, I think some people stormed Capitol Hill or something. I mean, that's big news. Don't get me wrong, but that's not as major as what's happening with blockchain. Now, the things to look out for: there's externally aware smart contracts, right? They're talking about things called oracles now, right? At the helm of all of this is Chainlink. It's now valued at about $6 billion. We can talk more about Chainlink in another video and how it works. But I think the most important thing to talk about is its potential, what it could mean. In my opinion, this is the altcoin that shows the most promise. In a nutshell, what a protocol like Chainlink does is it basically verifies information from outside the blockchain, like weather, for example, and then uses that as input for a contract on the blockchain, right? So it's possible that almost any smart contract on the Ethereum blockchain will involve a protocol like Chainlink's at some point, right? Powered by its Link token. The type of contracts that might involve a protocol like Chainlink's is virtually countless, right? I mean, you could use it for derivatives. You could use it by, you could use it for bringing stuff like weather information, price data, so on. You can even use it for like gambling and gaming by bringing the scores of games onto the blockchain and see who owes what to whom, right? So there's a lot of potential. There's a lot of projects that haven't been made yet that could be made, that could be created, right? So we're not thinking like, let's buy Link tokens and sell them tomorrow. We should think about Link tokens as long-term investment, considering all these projects and considering the fact that Link tokens will become like, the fuel for these smart contracts on the blockchain, right?
Ethereum is, you can have a general purpose blockchain. We can have a blockchain where instead of the blockchain working like a Swiss Army knife, where you have, 5 different tools for 5 different categories of applications, you have a blockchain that understands a general purpose programming language. So, kind of like your phone, in your phone you have Android or, iOS. And inside of Android or inside of iOS, you can have apps. The apps are written in, whatever programming language they're written in. Anyone can create an app. Anyone can download an app and run it. So that was the kind of general purpose flexibility I was trying to bring to the blockchain.
Once smart contracts have inputs and outputs, then they can become the dominant form of digital agreements in the financial industry, in insurance and trade finance. And until smart contracts have the ability to interface with useful inputs and outputs, it's going to be very difficult for them to do anything other than move tokens around. And essentially the solution to that problem is blockchain middleware. So blockchain middleware sits between the smart contract network, where the digital agreement itself actually functions, and the external systems that the agreement needs to know about. So basically, what we focus on is providing data and payments as inputs and outputs to smart contracts.
Decentralized autonomous organizations. So what if you could have a company whose organizational bylaws, instead of being enforced in the legal system, are enforced literally on the blockchain?
Now, considering all of this, what do you think about blockchain technology? I'm very interested. Which cryptocurrency are you going to invest in? Send me a LinkedIn message or leave a comment down below. Peace and freedom, baby.